Today's question is, what type of life insurance do I choose? I asked my wife how she'd respond, and she said, I don't know. No one wants to talk about life insurance. And she's not wrong, but that answer wasn't as helpful as I would have liked. You see, you have an emergency fund in case shit happens, right? So that your financial plan doesn't get disrupted because of the water heater going out or the car breaking down. Life insurance is there to secure your financial plan in case you die too soon. You really only need to have life insurance if you have some people dependent on you for support. Usually that would be children, spouse, relatives that are sick or disabled, etc. Okay? And then you want to have enough to plant you in the ground, to pay off some bills, maybe pay for school, and provide for their needs. The problem is that if you go looking, especially if you ask your agent or whatever, they're going to bombard you with all kinds of stuff. They're going to hit you with a zillion fancy terms like, oh, do you want cash value, whole life, permanent life insurance, universal life, universal whole life, some other silly name that I haven't even heard of yet because I've been out of the business for about 10, 15 years. The whole point to most of those is that they have a fancy name, but they're designed to incorporate some sort of savings or investment. And you might think, oh, well, that's great. You're talking all the time about, oh, we need to save and we need to invest. So you like these, right? And the answer is no. No, I do not. I hate them. They're the bane of existence. Why? No, I don't like them. Well, why? Then becomes the question. Okay, well, the answer is what you really need is none of these. You need some sort of level term insurance. The level term means that for a period of time, your premiums will remain the same and you will have the same amount of coverage. So why don't you like them? Well, you only need insurance while the kids are young, while you still have a house payment, while you're trying to build a nest egg, and your emergency fund. After that period, you're essentially self-insured. But whole life, cash value, things of that nature, oh, they want you to have this coverage in place forever. And there's a bunch of gotchas and catches in there. Really, those types of policies only benefit the richy rich 1% that are looking for a way to avoid taxes, that have maxed out every available option to provide for their retirement and to dodge taxes. That's not to say that there aren't select cases where they might be useful, but for the most part, they're not. Not for you, not yet. Not while you're building that big, enormous nest egg that you're trying to build. Now, why do these other insurance things exist? Primarily, as I've stated many times, because insurance companies are gamblers, okay? Like financial institutions, they're betting on you. What they're betting on, you're saying, oh, I might die before I'm able to build up all of these funds, and they're saying, but we're betting that you're probably going to live. And of course, I hope that they're right. But they're trying to maximize their profits, squeeze every last bit of coin out of you as you're on that journey. The insurance companies are a business. They are in business to make money. I don't fault them for that. I fault them for usually the deceptive way that these things are marketed to you. They say a fool and his money are soon parted, and that is true when it comes to insurance. They will dress these things up as savings or investment opportunities, but they rarely, if ever, work out that way. Most of the time, the funds end up gobbled up. Okay, well, a little bit more about a level term policy. I've mentioned that that's the way you want to go. Why is it the way you want to go? Well, because typically you're seeking these things out while you're young. And while you're young, you're usually in good health. Usually you don't have a lot of problems or conditions that would, of course, drive up your premium costs. And so you're wanting to lock in life insurance when you're young. Most people, however, don't really think about it until they get a little further along in life. Typically after they've come to the realization that, hey, things aren't quite working out as well as I had hoped, and I kind of want to leave something behind or take care of this person or that person. Okay, A word to the wise when you are looking for your level term insurance policy, if you decide to go ahead and secure your financial plan that way. Some things you might consider are an increasing benefit rider. I've talked before about inflation. Well, an increasing benefit rider helps to offset the impact of inflation, keep it from reducing the buying power of your life insurance policy. Remember, you need 2 to 5% to make up for inflation each year. And if things do happen and you fall off track with your financial plan, the increasing benefit rider can make up the difference and help protect those that you love, those that you're trying to provide for. Something else you want to consider is a child rider on your insurance policy. Nobody likes to think about outliving their children. I understand that. I don't like to think about it either. But it actually does two things. If the worst should happen while you're trying to build your nest egg and everything, the loss of a child isn't going to be a financial calamity for you. The other thing that it does is it guarantees insurability in most cases for your children, which is a wonderful thing. Things do happen, unfortunately, where they could develop a disease or condition, and then they would not be insurable. A child rider would be a way to kind of counter that and still allow them to be able to protect those that they love. They might be able to have a full life and have a family and whatnot, but if they're uninsurable, they wouldn't be able to protect their family. A child rider ensures that they can. That's enough about that. If you've got questions, hit me with those. The last thing I want to talk about is an accelerated death benefit. This is offered, usually it's standard fare on most insurance policies, but just in case it's not. The point to an accelerated death benefit, and I know that sounds like something you wouldn't want. I don't want to accelerate my death. But the point is that, dang it, where the hell? There. The point to an accelerated death benefit is if you find that you have one of those, a terminal diagnosis, a dread disease, whatever the case may be. Well, you're no doubt going to want to try and find resources. You're going to try to find a cure, a treatment, whatever the case may be. Well, an accelerated death benefit can provide the resources to allow you to do that. The other thing that an accelerated death benefit can do is if there is no hope, or if you choose not to pursue those options, it can allow you to have a little bit of fun before you die. Not just leave all of that money to your family. Maybe they don't need it now. Maybe it was just at the end of your, as you had established your nest egg and everything. Well, you can then in turn go and fulfill your bucket list. And that, of course, can be a great thing as well. Guys, I know I've hit you with a lot of information. Trying to get this done. I've been invited to a housewarming party. If you have questions, as always, please hit me with them. I want to answer them as best I can, and I don't want to shortchange you because I am in a rush. So leave it in the comments below, or hit me at fustyandfinance@gmail.com.